Hello, everybody. Welcome to another episode of Simply Bitcoin IRL. Today we have a very special guest, Caitlin Long, and it's special to us because we've been covering, however which way you'd like to describe it, the moving of the goalposts, like we say it. We've been covering this for a couple months now, and we've been dying to talk to Caitlin, so it's really, really an honor for us. Anyways, before we start the show, I want to give a shout out to the awesome Bitcoin companies that make this show possible. SwanBitcoin.com, best place to buy Bitcoin, built by Bitcoiners for Bitcoiners. And of course, Bitcoin 2023, it's going to be the largest Bitcoin conference in the world, Miami Beach, Florida. You can use the promo code SIMPLY to get yourself a 10% discount. Anyways, I want to bring Caitlin on stage. Caitlin, thank you so much for joining us today.
Hey there, great to be here. Thanks everyone for listening.
Happy to have you. So, before we get into Custodia and what's going on there with the banking charter, why the banking charter is important in the first place, because I think a lot of people don't understand that without that, you can't really be competitive. So before we get to that, I want to talk about what happened over the weekend, right? We saw a bunch of central banks, to be specific, the U.S. Central Bank, the Federal Reserve, the Bank of Canada, Bank of England, Bank of Japan, the ECB, and the Swiss National Bank. They made a joint statement. Caitlin, please correct me if you think I'm wrong, but I don't remember that in recent history at all. I don't think I've ever seen this before.
Well, no, the global central banks will coordinate. They oftentimes don't announce it like that. But there was a lot of cooperation and coordination, especially dating back to the 2008 financial crisis. What's different about this is that after the 2008 financial crisis, the Fed left open what's called swap lines, foreign exchange swap lines with other central banks. And for the most part, they've just been dormant, but they obviously have they've started them up again in a big way. And it will be fascinating to look at the impact of that on the Fed's balance sheet. I tweeted that I came from Credit Suisse. I spent 10 years at Credit Suisse, and I worked for almost a year directly for the co-CEOs of Credit Suisse in 2001 to 2002, so just over 20 years ago. And it was back at a time when Credit Suisse almost failed. And I remember at the time talking to the team who was advising the parent company. I was working on the restructuring of the insurance subsidiary that imploded at the time. But I was in Zurich at the headquarters in Paradeplatz, and talking to the team that was dealing with the Swiss government on the recapitalization of the company. The stock had gone from 90 to 19 at that point in time. And it was right after the 2001 stock market crash, 9/11, et cetera, just to paint the picture. And long story short, here's the punchline. We figured out that if Credit Suisse ever went under, it was going to be a gift, being sarcastic there, to the Federal Reserve, because the Swiss National Bank couldn't possibly expand its balance sheet big enough to bail out Credit Suisse. It was that much bigger than the Swiss economy. And so most of its exposure was US dollars. So basically it was going to end up being the Fed's problem, not just the Swiss National Bank's problem. And through these foreign exchange swap lines, I think we're going to see that that's exactly what will have happened. The Swiss economy and the Swiss currency, the Swiss franc, is just simply not big enough. It's a fraction of the size of the euro area, a fraction of the size of the US. And as a result, when you get a bank that big that dwarfs the entire economy of its home country, when it goes under, it's going to be felt around the world, and all the central banks are going to end up having a problem, most especially the Fed.
So was it a bailout? What really happened here? And then before we get to that, could you explain in layman terms what swap lines are for everybody?
Yeah, so it's essentially a way for US dollar funding to make it to offshore banks. So Credit Suisse has a big US operation. In fact, they have a New York branch of the Swiss bank that is what's called a primary dealer. It's one of the couple dozen large banks that is required to buy and does partake in every US Treasury auction. So when the US government issues debt, they do it through the US Treasury, but they actually do it through what's called the primary dealers. They are the biggest banks in the world, and Credit Suisse was one of those. UBS is as well, by the way. But all the big banks are primary dealers. It gives you an advantage because you get access to that newly issued collateral, which is extremely valuable in financial markets. So, what happens in a foreign exchange swap is that a central bank can pledge U.S. Treasury collateral in exchange for U.S. dollars. And so if there's a shortage of U.S. dollars in the Eurozone, the ECB, the European Central Bank, can take U.S. Treasuries and pledge that as collateral for an overnight loan, effectively, in U.S. dollars. So the dollars make their way to Europe. And I think that's going to be the method. We're going to, eventually the Bank for International Settlements will publish a heat map that shows the directional flows. And they did that after the 2008 financial crisis. It was extremely interesting because the Fed's balance sheet expanded from 800 billion to about 3 trillion during the 2008 financial crisis. Last I looked, it's 8.4 trillion now after having been brought down from a peak of just under 10 trillion. But that gives you a sense of the numbers here. And the punchline is that in 2008, the bulk of the flows, the bulk of that expansion from 800 billion to 3 trillion back in 2008 on the Fed's balance sheet went to foreign banks. It was an offshore shortage of US dollars. And I think that's going to end up happening here again, potentially.
So, and then was this a bailout? I have for our video listeners, I have the Fed balance sheet pulled up and what Caitlin was describing, right? Just it literally looks like a hockey stick up. It just keeps going.
Yeah, of course it's a bailout, right? I mean, these are backstop facilities. If the banks were solvent, they wouldn't need the backstop facilities. Now, a lot of people will debate because, this is temporary liquidity. It's a loan. It's not an asset that's going on. The Fed's not buying the actual treasuries, which would be technically QE, but it's backdoor QE. Yeah.
Interesting. But it's fascinating how they frame it, right?
It's a confidence game.
And Arthur Hayes, it's a confidence game. Arthur Hayes came out with a tweet thread too, and he basically was making the argument that it's extremely it would be extremely damaging politically. So they had to frame it in a certain way, and I thought that was fascinating.
Well, the same thing happened in 2008. So, it obfuscated in complexity what was really going on, and indeed, I think that's happening here again.
Interesting. Okay, so I really want to use the bulk of this time that we have together, this hour that we have to talk together to talk about Custodia. So first of all, why don't you tell everyone, Caitlin, what is Custodia Bank?
It's a safe bank. It's a bank that doesn't lend. A bank that was proposing to hold $1.08 in cash for every dollar of customer deposits in a Fed master account, and the Fed unfortunately denied that request.
Why'd they do that?
Well, the detailed reasoning has yet to come out. I think this community is going to have a field day when it does, but let's see what they say and what they release. But they did call us unsafe and unsound. Great irony. A 108% reserve bank is called unsafe and unsound, while the 6% reserve banks that they were calling safe and sound are now imploding. So quite ironic.
What was really fascinating to us was the moving of the goalpost, right? Apparently the approval process takes about 2 to 3 weeks, or it did before.
5 to 7 days.
And then, exactly, right? And then they just kept elongating it. And then to me, Caitlin, it seemed like quite a big coincidence, the moment in time of which they officially denied the application. It's almost as if they needed a great excuse.
Yeah, I mean, I know a lot about what's going on. Obviously, some of that is subject to litigation, and there's only so much I can talk about. But you're right. It is not imagined. This was very coordinated. And there were a number of process and procedural changes that corners cut in getting this done. And we're not sitting down and taking it lightly.
Do you believe that, of course, I want to kind of tiptoe around this. Do you believe that this was politically motivated.
Oh, of course. Absolutely. Yes. Which is what is so interesting. I say with a smile on my face. In the sense that each applicant under administrative law is to be afforded certain due process rights. And we had this is publicly disclosed. We've talked about it before. 2 days before the application was formally denied, that we were getting leaks from major media outlets telling us that our application was about to be voted down. It was a foregone conclusion. It was preordained. And that was 2 days before the vote took place. And we hadn't even made a decision yet whether to withdraw our application or not withdraw and have it presumably be voted down. But wait a minute, this was supposed to be a fair process. And so there shouldn't have been a presumption at all that the vote was preordained. And the reporters were telling us that the Fed governor's vote was preordained. This was supposed to be an independent entity, and there's supposed to be process and procedure around it. We also have in writing from a reporter that all of the applicants at the OCC and the Fed, the OCC is the National Bank Chartering Authority, were simultaneously asked to withdraw their applications. Again, applications were supposed to be judged on their individual merits, but apparently that didn't happen here.
Interesting. Very interesting. So, we're Bitcoiners after all, Caitlin. So we're believers in incentives. What is the incentive for, denying this application?
Oh, anything new, anything innovative. It's interesting because, like I alluded, this was a long process, and towards the end, especially, we spent a lot of time with folks on the ground, and again, there's only so much I can talk about. Technically, the way that the Fed works is that they control something called confidential supervisory information, and that cannot be disclosed without their permission. And of course, we're not exactly in a friendly position with them right now from the legal perspective because of that litigation. So there's only so much I can disclose. But once it all comes out, it's going to be clear, how much work we did with them from in the last several months, and how much progress we made. And I know we had our supporters among the staff. This was a political decision that came, unfortunately, we know, from the White House. Very surprising that the Federal Reserve would politicize a vote like this, but it did.
Interesting. And speaking about the White House, we know that the current administration has been, you can't even say they're doing it under the rug, right? They're definitely publishing it, in their, whether it's, the digital assets framework. The one that I find hilarious, Caitlin, was a report by the Treasury. And the report's name was The Future of Money and Payments. Right. And that entire report, they mentioned stable coins, they mentioned payment platforms. Of course, they mentioned their favorite central bank digital currencies, but they never mentioned Bitcoin. And I thought that was fascinating.
Well, from my experience, and I've done a lot with mainstream. Again, I came from the mainstream world, right? So I have one foot in both worlds, and definitely am comfortable talking to people in both worlds, and have done a lot of talking with, policymakers, including former Fed officials, about our world. And virtually none of them think Bitcoin should have value. They just dismiss it because nothing backs it. And of course, nothing backs the US dollar either, except something ephemeral, the full faith and credit of the United States. Well, what does that actually mean? If you really stop and think about it, money's ephemeral, the whole thing. It's a confidence game. And but the whole concept of it being backed by the full faith and credit of the US government, people put a lot of stock in that, as opposed to being backed by math, which is and hash power, proof of work, which is just harder for people to get their heads around. But I would say the vast majority of people inside of the mainstream financial services regulatory apparatus don't understand Bitcoin because they can't get their heads around subjective value.
And what about, Caitlin? So there's two components. We've been going down this. We always say we're slaves to news cycle because we're a news channel primarily. And one of the things that we say is, are we ever going to get a friendly environment with, I know on a state level, that's a different story, but on a federal level, if the regulators that, are tasked to, regulate this industry also have a tremendous amount to lose if this industry succeeds. And the reason I'm saying that, right, is that we know that the federal government gets a tremendous amount of power from, dictating the monetary policy and basically having a money printer, right? And that's how they get away with all the deficit spending. They're spending money they don't have because they have, they have a printer. They're not really incentivized to be open-minded for something that could potentially threaten that. What would you
Yeah,
say to
but
that?
you know what? It's like, I'm sorry, I just kicked my stand here. It's like the taxi and limousine commissions when Uber came along. They weren't incentivized either, but people voted with their feet. And this technology is so much better for multiple reasons that people will continue to vote with their feet. I'm quite sure. And you see it actually. I don't even need to submit. You can see it objectively and confirm for yourself. A lot of mainstream thinkers don't understand why Bitcoin has any value at all, and they still think it's going to zero. And I think it's hilarious that Bitcoin has gone up in their face. Um, and there are multiple reasons for that, but uh, they have to eat crow, and they will. There's a website, 99bitcoins.com, that keeps track of verified Bitcoin obituaries. And I haven't looked at it recently, but last time I looked at it was a couple months ago, and they were up to 467 Bitcoin obituaries. Bitcoin has died 467 times. And in some cases died at the mouths of the same people who swore it was dead. And then 2 years later, they swore it was dead again, So you just have to laugh. I love the irreverence of that website because it documents for posterity just how many people can't get their arms around the concept of Bitcoin. And yeah, as a result, here we are.
As a result, here we are. So, Caitlin, I saw your pictures on Twitter. It seems like you were spending some time in the Imperial City, or some people call it the swamp.
The swamp.
However, which way
Oh,
you'd like
yeah,
to
the
describe
swamp.
it. What is your gauge on, the average congressman or congresswoman? What's their take on Bitcoin? And a troubling pattern that I've seen, and to me it's heartbreaking because I really believe that Bitcoin is bipartisan in the sense, it doesn't lean left or
Correct.
right. It's helps everybody equally. But the troubling pattern that I've noticed, and of course it's not monolith, it's not black and white, but it seems like the more right-hand side, the Republican Party, is a little bit more open to Bitcoin, while the Democratic Party has been a little bit more hostile. So is that trend continuing? Or am I seeing something that's not there?
Well, the White House has all the power, and of course, that's in Democratic hands. So, right now, that's, I think, more of a perception than a reality. Because again, the anti-crypto wing of the Biden administration is that hardcore progressive wing. Although um, there are progressives who are pro crypto because of the ability to deliver services through technology, through a phone, that the traditional banking system is not delivering. So it's you cannot make generalizations. And even in Wyoming, which is a red state, the most active legislator in support of all of the blockchain bills is the Senate Democratic leader. So it doesn't cut across party lines. Some of the biggest critics of the Wyoming initiative are the hardest core conservatives, because I would say they're probably more neocons. They're in some ways they're more, hey, it's kind of like what Trump said, when he attacked Bitcoin in summer of 2020, I believe it was. Just, he said, hey, why would we need anything other than the US dollar? I'm a big fan of the US dollar. And there is a big component of the right that thinks that way as well and is anti-Bitcoin as a result. So it just doesn't cut across traditional party lines. You can't draw those conclusions.
Well, that's extremely refreshing to
Yeah.
hear, because I do believe that, in my heart, right, this is not a left and right issue,
not.
and I would hate for it to become one. So you mentioned something about the hardcore progressive wing in the Biden administration that are anti-crypto. Why? Why would they? You would think, right, that they would be for the most inclusive, equal money the world has ever seen. that those are progressive values. So what do you think their motivations are?
Well, it's again, it doesn't cut across party lines, but there are authoritarian streaks in both political parties. And when they're called out on it, they don't see the hypocrisy in saying, oh, that, the other side's authoritarian streak is what you really have to be afraid of. But my side's authoritarian streak is just fine, right? That's hypocritical. And, for whatever reason, it evolved that way. It's when I say for whatever reason, it's obvious the reason. Actually, it's all about personal power of the people in charge, unfortunately.
But that's what it stems down to.
Yeah.
It stems down to, we can't control this thing, so therefore it's bad. Doesn't matter how aligned it is with the goals that we tell everybody about.
Yeah, correct. And it isn't controllable, right? And I mean, that's why I'm not a fan of the centralized protocols, because they really do have individuals who, whether in reality or whether in perception, have a kill switch. I mean, when Charlie Lee stepped away from the Litecoin protocol, that was a big deal because he decentralized it at that point. But you haven't seen Vitalik do that with Ethereum. You haven't seen Charles do that with Cardano. I mean, when they do step away and truly decentralize it and hand the protocol control away from their foundations that they arguably control in some cases, that's a big deal. That's the big deal. And if then it continues to decentralize thereafter, that's a really important aspect as well, is the degree of how much other people step up. I mean, in the beginning, Bitcoin wasn't decentralized either. Satoshi was pure by not doing a pre-mine. But the way, if you look at centralization in an open source protocol, by definition, whoever's creating the very first 1.0 version of the software is controlling it. And so at what point did it become decentralized? I think in Bitcoin's case, it took a while, but it's very clear that it did become decentralized. And I don't disagree with the assessment of the US government asking the question whether Ethereum, especially after it went off proof of work towards proof of stake, it had given up its decentralization. We haven't had an official answer from that on that question from the US government yet.
Yeah. Interesting. No, these are definitely interesting times, to say the least. So, Caitlin, I would I want to get your take on, Nick Carter wrote a great piece, Operation Choke Point 2.0. Yep. Are those things happening?
Oh yeah.
Right. You already touched upon this earlier, right? That there's elements of the U.S. government that are hostile towards this movement. Yeah. So what's your take on that? Is it accelerating or decelerating?
I think they've done a lot of the damage already, right? They took down the two biggest banks that served this industry.
Wait. You buried the lead there. You just said they took down the two big. Wait, was it on purpose? I mean, but they said it was for the people. They said it was for consumer protection.
Well, no, look, I mean, and obviously we're involved in this. We were at the time the tip of the spear. It did seem that way to us. We weren't sure how far it was going to go. It may not be done yet, but of course, look at what the wrecking ball has done, right? It took the applicants, including Custodia, Paxos, and Pertigo, off the table, and then the SEC sent Wells notices to all the U.S. based exchanges, and then obviously Silvergate and Signature started to have their problems. And I'm not saying that it was black and white in the sense that there was one cause for this, because of course the management teams of those banks took way too much interest rate risk, right? I mean, I've pointed out before that at the peak of the bull market, right before all of the bankruptcies started in the crypto industry, Silvergate had 1.4 billion of cash to redeem 13.3 billion of demand deposits. That's according to its March 31st, 2022 SEC filing, its 10Q. So again, 13.3 billion of demand deposits that could be withdrawn in minutes and only 1.4 billion of cash. They were rolling the dice. They should not have sat in anything other than pure, plain, old, boring, old cash. They should have had 13.3 billion of cash to back the 13.3 billion of demand deposits that could be withdrawn in minutes. And if they had had that, would they have been less profitable during the good times? Sure. but they would still be alive today. So, and all the banks did that. We're seeing in the huge increase in interest rates that took place, the community banks and the regional banks were not hedged. And as a result, if you mark to market their bond portfolios because of the bond portfolio losses stemming from the big increase in interest rates, guess what? They might not actually be solvent. That's what we're seeing in the case of dozens of banks that are under bank run pressure today.
Interesting. Okay, so I'm going to tie this up with your bank, right? Fully reserved.
Correct.
Why is that dangerous?
Ask the Federal Reserve.
What's going
it's
on
interesting
there?
Because
no, wait, hold on. Sorry to interrupt you. It's not only fully reserved; it's 106 or 106 or 100.
Yeah.
What's going on?
Go ask them. And wait. At some point, they'll have to reveal the detailed reasoning. It's the law. They'll have to. How much of it they redact is an interesting question, and they haven't revealed it yet. We were expecting that it would be revealed by now, but it hasn't been revealed. Interesting question. Why haven't they?
But you said that eventually they're not going to have a choice.
Correct. Yeah. But how much of it they redact is up to them. So, some of the things that they might in retrospect find embarrassing, given everything that happened, maybe they'll redact. Who knows? Embarrassing to them, not embarrassing to us, embarrassing to them. Yeah.
Yeah. What is sunlight is the best disinfector, something along the lines.
You bet. And sometimes the sunlight has to shine in ways that force their way in. So in other words, a lawsuit or, a congressional investigation, as opposed to the Fed shining light on itself.
So, a couple there's been a couple, things that I've noticed as of late, right? You've seen again, it's still on the fringes, but you've seen the movement of the Fed pick up steam. Is that even possible? Because from their perspective, the same week that they shut down Signature was, again, big coincidence, was the same week that they announced that the FedNow payment system that they're developing is going to be ready to launch in July. So it looks like to me they're putting their hopes and dreams on an American CBDC.
Well, I'm not there yet. There were some people who asked the question early on, is the reason why Custodia was the tip of the spear in the debanking crackdown because we had proposed a digital dollar, AVIT, that would be issued by a bank on Liquid, a sidechain of Bitcoin, and Ethereum as an ERC20 token. And there were some who also pointed out Custodia, because we own the patent on tokenization of a bank, of a digital dollar, of a U.S. bank accepting a U.S. dollar deposit and turning around and issuing a blockchain token for that deposit. In other words, stable coins, but issued by a bank. We own the patent for that, and it was granted last July. There's an interesting question surrounding the Federal Reserve, which is it a private entity or is it a public entity? And the answer is it's both, and it kind of likes to play that ambiguity to its benefit depending upon the facts of whatever the situation is. So there's no question that the Federal Reserve Board in Washington, D.C. is an agency, but then these private entities, nominally private entities, the regional reserve banks, which are owned by their member banks, they do administrative things. Do they actually have the power to do that? And if they do, are they subject to the Administrative Procedure Act? Are they subject to the Freedom of Information Act? And it turns out the different reserve banks don't even take the same position on those very questions. They may contradict each other. So they like exploiting the gray area. And so, the reason I bring that up in the context of the question about whether there's a CBDC coming, I know there are several who want it. Will it actually come or not? And does this crackdown on stablecoins have anything to do with CBDCs? Is it plausible? Yes. Do they need to get us out of the way because those quasi-private entities, the Federal Reserve banks, might actually be subject to the patent that Custodia owns? Yeah, it's plausible. Is it the real situation? I don't know, but the time will reveal that.
So I sense I sense optimism, right? And perhaps we're in the thick of, we have to read the news every single morning, and for people, we're in the ring in the sense that we have to tell people what's going on, but we're not in the ring of, we're not in the swamp, we're not in Imperial City, we're not on the ground. But it seems like you're optimistic. Do you believe we'll win this? Do you believe that you will get that banking charter? And what needs to happen? Is this a question of we don't have enough political willpower? Is this a question of regulators are just not educated on the matter? Is this a question of regulators just they want to keep their moat, right? So what are your thoughts on that?
Well, it's a little bit of all of the above, although the funny thing is we were offering them the ability to expand their moat, right? To bring all this inside the regulatory perimeter and to get a friendly. And we really did consider ourselves a friendly. We were actively helping them understand all of this. Which is why when we got blindsided by what happened, the U-turn in January and the denial, it really was a surprise to us, because we were making progress. So again, a lot of the people on the ground, I think, probably felt the same on their end. It was a decision that came from the very top in Washington, D.C., unfortunately. So how this plays out, I don't know. It would have been the best decision for them to bring us inside the regulatory perimeter, have one of these companies, regulated by them, working with them, helping them understand. It's crystal clear to me that they do not understand. And let me give you an example. Unfortunately, in the January 3rd interagency statement among the 3 federal banking agencies, that there was a reference to open, public, and or decentralized blockchains, or maybe it was open, permissionless, and or decentralized blockchains. And they're discouraging banks from using those. Sorry, the word protocol, it was the word protocol, not blockchain. So it was open, public, and or decentralized protocols. Open, public, and or decentralized protocols. Step back and think about that phrase, open, public, and or decentralized protocols. Isn't TCP/IP an open, public, and or decentralized protocol? Isn't SMTP an open, public, and or decentralized protocol? Isn't voice over internet protocol an open, public, and or decentralized protocol? They all are, of course. So inadvertently, what the bank regulators did was technically ban the banks from using the internet. Now, we all know that's not what they meant. Okay, but this when lawyers draft things, and I'm trained as an attorney, so I can throw shade at lawyers. When lawyers draft things and know nothing about technology, that's what happens. And I think that that's what happened in that situation. And there's another example. I won't get this precisely right, but they defined crypto asset to be any asset stored electronically using encryption methods. And I can just almost hear the developers listening live howling at that definition, because every asset on a bank's balance sheet is stored electronically using encryption methods, right? I mean, hell, what is TLS? Transport layer security, it's encryption. So when assets, when messages are moving across the internet, which is really what an asset is, it's just a ledger entry. A digital asset is a ledger entry. They're using encryption. That's stored electronically using encryption, right? So, I mean, these definitions were so bad that it just goes to show you how much help they really need and how little they understood. Those definitions can unfortunately be used against them. I don't think anybody's challenged the open, public, and or decentralized protocol piece yet. To ask them, are you telling us we can't use online banking at all? I think there's a wing of that group that doesn't like online banking at all. They want to slow everything down to analog speeds. I know that that's the case. And that's part of the reason they went after the most tech forward banks, because those tech forward banks scared them. And I'm not just talking about the crypto banks. I'm talking about Silicon Valley Bank as well. Those tech forward banks scared them because you can use software through an API to direct payments. Well, that's a lot faster than having to go down to the physical bank branch, get in line, and fill out a form and deal person to person with a bank teller. That takes hours, whereas using software through an API can be done in a fraction of a second. So the settlement times is on the back end. Once the Fed receives the payment instructions, the settlement time is the same as it was analog versus digital because it's still analog. But you see where I'm going. Everything's speeding up, everything. And I think I think that scares them. They would much rather have slower settlement and slower transaction instructions that just give a lot more time for the system. I mean, one of the things that I pointed out in Twitter over the weekend is, can you imagine if FedNow had actually been in place and we had 24/7, 365 ability to move our bank deposits from bank to bank? Can you imagine the bank deposits that would have been flinging around from bank to bank over the weekend as people panicked? That's just going to be incredible. Bank runs are going to happen faster and faster and faster. They're not going to slow down. Much as the regulators, I'm sure, would love to kill the tech that enables that, it's not going to happen. It's like taxi and limousine commissions when people kept voting to use Uber. They couldn't stop it. It was a juggernaut they couldn't stop. People voted with their feet to use the better tech, and that's going to happen here as well.
Is this a question of are we waiting for a new administration that is friendly towards this, right? And we know, for example, that Trump we know how he feels about Bitcoin. We know how the Biden administration feels about Bitcoin, even though I don't think Biden has ever been as vocal as Trump about it specifically. But we know based on their movements, right? Based on their actions. So even if there is a change administration in 2024, right? You would still have an administration. Again, it's not left or right thing, but you'd still have an administration that is not necessarily a fan of what's going on. So do we need a Bitcoiner president? Is that what it's going to take?
No, Bitcoin doesn't care about any of this. Seriously, Bitcoin just keeps on trucking. It just keeps adding blocks. It is immune to all of the on-off ramps from fiat currency into Bitcoin. If we had to freeze, if there was never another US dollar that ever came into or out of the Bitcoin ecosystem, we would be just fine. Seriously. And to be honest, one of the reasons why the Bitcoin price has gone up is because stable coins are not as easy to use. There's been a significant burn of stable coins now because they're losing US dollar banking system access, or certainly there's a cloud over that. And as a result, what are people moving towards? Instead of sitting in stable coins overnight, they're sitting in Bitcoin, which is the core asset of this ecosystem. And that's increased the demand for Bitcoin and pushed its price up. So if we never had stable coins, we never had US dollars coming into and out of the ecosystem, would it be harder? Yeah, it would be. Would it slow down the development of the ecosystem? Sure. But would we be just fine? Yes, you bet. We'd be just fine.
So let me rephrase the question in a way. And I completely agree with you. As a big, honey badger don't care. TikTok next block, right? But would the U.S. government be putting itself in a position where it is forcing Bitcoin-friendly companies overseas?
Oh yes, they are doing that. They want that, and I laugh because there's an old famous phrase: organizations that make decisions out of fear tend to get exactly what they feared. So the engineers in this industry, to whom we all owe a debt of gratitude, are tremendously talented. Tether was created arguably out of necessity because of the debanking wave in the last bear market 4 years ago. And Tether really started to take off at the end of 2017 into 2018. And that was when there was a huge debanking wave. So, we've seen this. It comes in 4-year cycles. It tends to be tied to the Bitcoin halving cycle, which is essentially a 4-year cycle, 210,000 blocks. And we've seen this before. They're not going to kill Bitcoin. I'm not worried about that. Does it change the development of the ecosystem? And does it reduce the demand from Americans? Sure. But hell, even China's opening up to this again. You're seeing the rest of the world embrace it. I do happen to think there's a national security aspect to this, and that the US is making a terrible mistake. Just like I said, China was making a terrible mistake when it really did crack down and trying to get serious a couple of years ago, anti-Bitcoin, but they're letting it back into Hong Kong again now. That is not insignificant, folks. It's just that the center of gravity is not going to be in the US anymore. The center of gravity for the ecosystem of companies that are building that infrastructure to help increase mass adoption, that center of gravity is not in the US anymore. It's offshore. But the Fed's going to continually have to find ways that this leaks into the financial system, and they're going to be playing whack-a-mole, because there will be intrepid people, enterprising people who find ways to get US dollar access to it, in spite of everything the Fed does to try to block that.
100. And this is fascinating. I'm really enjoying this conversation, Caitlin. So to me, it just sounds like they're not going to have a choice. Like, it's like, look, get on the Bitcoin train, benefit from it. Yes, you're not going to benefit from a lot of the powers that you had when you had a total monopoly on the money, and you basically used the dollar, and now people have a choice. But that's a very tough pill to swallow for, politicians that have been operating under this monopoly system that we've had for at the end of I can't think of another time in American history, right? So is this the type of thing where, they kind of metaphorically, of course, they have to get their finger burnt on the stove. We know there was a Bloomberg article where it's so fascinating. Hong Kong, right, was saying, hey, we're going to be friendly towards this. They had CCP officials in the city putting their stamp of approval. It's very frustrating as an American.
I mean, yes, it's frustrating as an American, because even China is opening up to it again. It's incredible, right? And the US is being more authoritarian than China.
Yeah.
It's true.
Yeah.
So.
But I mean, it makes sense. They have they have the most power. They have the world reserve currency, right? Why wouldn't they want to defend that?
Well, but I think Nick Carter's essay from January 2022, where he wrote a really interesting analysis that stablecoins will help extend the US dollar's reign as reserve currency. I think he's right, because the technology is so bad. Now, of course, the Fed, didn't want competitors like Custodia's Abbott, or the BUSD stablecoin, for example. If you just look at how authoritarian the crackdown has been, they're trying to shove the competitors off to the side. And when I say competitors, I'm talking about competitors to Fed now. It's going to be fascinating to see how people respond when Fed now comes online. Really fascinating.
Yeah. Does it worry you that Alex Gladstein, here we go. Opti, let me click it. There we go. Alex Gladstein wrote an amazing book and called Financial Privilege, right? And the reality is that, if you live in a developed country that has a relatively stable fiat currency,
correct,
there isn't a very big incentive for you to seek an alternative. Like, if I speak to an Argentine and I'm like, hey, there's this non-government currency, can't be debased, can't be easily confiscated. They're like, where do I sign up?
Bring it in, shoot it in. Exactly.
This sounds amazing. But Europe or the US, where the bread and circuses is very strong, so to speak, right? And we're very privileged to have all these financial applications, Venmo, Cash App, all that stuff. Does that worry you at all? That people are just like, Bitcoin's boiling the oceans. It's not necessary.
Yeah, but you know what? It's a process, right? I mean, I got very curious and got myself on the path after the 2008 financial crisis, when I got curious why the financial system was so unstable, and the things that I learned in school, you realize aren't exactly how the financial system works. Curious people go on deep dives. And I tweeted out this morning, just overnight last night, I had 434 new LinkedIn requests. LinkedIn is not like Twitter. You don't have all the bots. In most cases, these are verified real people, and much more so traditional finance, lawyers, accountants, regulators, people that I went to law school with, right? That's my network on LinkedIn. Very different than the network on Twitter, which is very different than the network on Nostr. But 434 requests overnight on LinkedIn is huge. It's just a deluge. And that's the second time that I've had a few hundred just overnight. And it's just accelerating in the last week. It's insanity what's happening. Okay, what is that telling me? Why did I share that anecdote? It's just anecdotal, it doesn't prove anything. But what it is it's a qualitative evidence that there's a sea change happening, that there are more people in the TradFi world who are waking up and realizing something's wrong here. And the system that you work in is not stable. I learned that in 2008. I started to get very, very curious, went on a very deep and very broad intellectual journey. I was taking classes on at MOOCs at night. I was doing all kinds of reading and research from the Austrian school on one end of the spectrum to MMT, modern monetary theory, on the other. And it was fun because I didn't learn those theories in school. In fact, actually, I still have my history of economic thought notebook in my office here. And it was one of my favorite classes in school. And I went back and looked, was there anything about Mises or Rothbard? No. Was there anything about chartalism? No. Those were considered fringe theories. Those were not the mainstream theories that were taught in school. So everybody still has to figure out for themselves. It's their own intellectual journey. But the reason I went on this little diatribe is I think that a lot of mainstream people are waking up. I think that they're understanding that what they've been told isn't necessarily the truth. And curious people tend to go down rabbit holes. And come on in, folks. It's time to get orange pilled. You might not go back out of that hole.
And it's a one-way street. It's I don't think I've ever met someone that's like, understood about Bitcoin. They're like, hey, this dollar thing, it's sweet. Let me go back there,
But the leap so many have to make is subjective value theory. And so few in the mainstream are willing to make that leap because they want something objective. But what they don't understand is that objective price, it's turtles all the way down. There's something subjective down at the bottom of that price theory. There's always something subjective. And so, they just have to make that leap. And for a lot of folks, it's just a leap too far.
And you're speaking about it. You're speaking about it's a leap to, and that's the fascinating part. It's a leap too far for someone who doesn't need it. If they don't have the necessity, right? Correct. It's a leap too far. If Venezuela and Argentine, no, he's like, it's about putting food on the table, right? But you mentioned the subjective part, and it's so fascinating to me. And the Freudian slip coming from the central bankers is when they're like, this thing has no value. And then you're just looking at the price and you're like,
$28,000.
Are we looking at the same thing?
Yeah. Right. So well, this is why, again, that's why I love that website, 99bitcoins.com, that has all the verified Bitcoin obituaries, because it's just so irreverent. It just calls them on their own BS. I love it.
Yeah, 100%. And then you see them like they're like, Andreas Ottenopoulos. He was the original person that I would just watch his lectures on repeat, and he played a major
spectacular
role.
so
good.
Just, man, did he orange pill a lot of us. Yes.
Yeah. Him and of course Max Kaiser played a very big role in my journey, and for
me, Trace Mayer as well, and Adam Back.
Interesting.
During the block size wars.
Block size wars were definitely scary. And I'm looking at it from the miner's perspective, and you're just looking them artificially past the Bitcoin hash rate. I think it was like 2 or 3 times, and you're just looking at it like, there is no way they pulled this up. It's only did we learn after the fact that it was all artificial. They're setting money on fire in order to make that happen.
Yeah.
Anyways, so I completely lost my train of thought because I'm enjoying this. Okay, so Caitlin, this is another.
Wars. Oh, go ahead.
So no, I wanted to touch upon something that you've beaten the battle drum about many times, which is this idea of rehypothecation, right? And the importance of Bitcoiners taking self-custody. Like that's like you have to do that. So what is rehypothecation, and what is the danger that rehypothecation poses to Bitcoin?
Well, you don't get a true market price because it's fake supply. It's paper Bitcoin. So we now know that Sam Bankman-Fried was selling Bitcoin and Customers thought they were buying Bitcoin from him, but he didn't turn around and buy the actual Bitcoin on the market and hold it for his customers. He just took the money and did what he did with it, it would appear. So he sold them phantom Bitcoin. That Bitcoin didn't exist. Now, that Bitcoin, though, in a market appeared as though it was legitimate supply. Now, go back, and I did a big tweet thread about this about 2 years ago on supply demand and Hayek's. I had an aha moment reading something from Hayek. I've always said that anytime you push the supply curve out and to the right, if you think about your supply demand curves, your price is going to drop when you push the supply curve out to the right, regardless of whether the supply that was created was real or fake. You're going to actually, holding demand constant, the price is going to drop because you now have more supply. Okay. But what I didn't realize at the time was that it also reduces demand, because demand for the real thing, because the fake stuff is satisfying demand for the real thing. People think they get the real thing when they buy it from FTX, and it turns out they didn't buy the real thing at all. They bought just a phantom instrument. Now, if we added up all the claims to Bitcoin that people thought they owned from their counterparties and looked at how many Bitcoins there are outstanding, I think 19.3 million or so, it would be a lot more than 19.3 million. So a lot of people were sold fake goods, period. It's fraud. A lot of people were sold that. And it unfortunately suppresses the price in those two ways.
And a lot of people were expecting, and this was, I don't know if it's because of, a lot of people believe in and I do as well, to be frank, this, the theory of diminishing returns. The reality is that it's a lot harder for Bitcoin to double from 28,000 to whatever the double of 28,000 is for it to go from $1 to $2. Like, it's a lot hard. It's a lot bigger lift. But I guess what I'm trying to say is that a lot of people were let down that Bitcoin didn't hit 100K last cycle. And do you believe that the rehypothecation played a role in that?
Yes, because it clips off the top of the bull markets and it actually amplifies the bear markets on the downside. It's asymmetric. And again, it's all just logic. If people are buying the real, if they think they're buying the real thing, but what they're actually buying is fake, then all else equal, the price is going to drop. Okay. And so that's going to clip the top of the bull market, because up until 2017, we didn't have a lot. We did have scammers, right? You did have Mt. Gox and Quadriga. So you did have people who were running so-called fractional, right? They had more claims to Bitcoin on their balance sheets that they'd issued liabilities for than they actually had assets on their balance sheet. We know in Mt. Gox's case that was true. The reason was because they were hacked and then they tried to cover it up. Quadriga, who knows what really happened there, but clearly they sold more Bitcoin than they actually had in inventory to back up those liabilities. Okay, so those two companies helped push the Bitcoin price lower at their peak than they otherwise would have. Now, once we got in 2017, where you started to get derivatives markets, the derivatives markets played with the spot price even more. It can kick around the spot price to a tremendous degree. And cash settled derivatives do it less than physical settled derivatives. And I started writing in 2018 warning that when backed, the sister company of the New York Stock Exchange was getting into the Bitcoin futures market, that here comes paper Bitcoin. And it ironically, backed didn't do it as much as FTX did, because backed was limited to 2.5 times leverage in the futures markets here onshore, whereas you had FTX at 125 to 1 leverage. 2.5 times compared to 125 times, big difference.
Yeah, absolutely. So do you think we'll ever see a Bitcoin ETF, a spot ETF? Does that even matter?
Doesn't matter to me. I'm on the record that that's a double-edged sword. It certainly would be better for as a market structure instrument than GBTC. The problem with the closed-end funds is that they can trade at big discounts or big premiums, usually discounts to the spot price, because the fees obviously have to get passed through. And so unfortunately, in GBTC's case, it traded at a huge premium, and now it's trading at a huge discount. So it's just not tracking the spot, and it's not helping investors. It's not been a safe product for investors. And I do wish that the SEC would allow a restructuring of that. But they're very afraid of allowing spot Bitcoin trading into regulated markets because they think that they're going to be implicitly endorsing it if they do.
Yeah, interesting. Very interesting. Well, Caitlin, we're at the top of the hour, and I don't want to take more of your time. Thank you so much for joining us today on Simply Bitcoin IRL. Why don't you tell everybody, of course, where this is a question I ask everybody. So why don't you tell everybody where they can find you online and what you're working on nowadays?
At Caitlin Long _ on Twitter. Nostr, come join me on Nostr, all you Nostriches. It's a Bitcoin adjacent network. If you haven't signed up, definitely do. It's so cool to see sats flying around, and we're bootstrapping. We collectively, the community is helping to bootstrap that Lightning network, and that's a huge deal. Big fan of Lightning. And then also LinkedIn and then custodiabank.com. Can't say much about what's happening in our future plans, but stay tuned. It's exciting.
Thank you, Caitlin. I'm going to put you backstage for a second while I wrap it up. Guys, thank you so much for joining us. Another episode of Simply Bitcoin IRL. We'll be back tomorrow for the live show, 12:15 p.m. Eastern Standard Time. I love you all. See you tomorrow.